Good morning, distinguished members and distinguished friends. It's a pleasure to have you in one of our Sustainable Development Platform webinars hosted by our initiative. Today, we are with you today with a very special event and with a very special guest. You might be following us for a while about our impact investment agenda. We've been trying to establish or support the establishment of the impact investment ecosystem in Turkey for a while, starting from our International Investment Summit that we spared one full day for this important topic. And then we started talking about why we should do this, and then switch to what we should do, and then how should we do it. And during the way, while developing this ecosystem in Turkey, UNDP played a very major role and a critical role and supported us and all our counterparts who are trying to achieve the progress in this area with the utmost serenity and support. And first of all, to begin with, we would like to thank you because this is such an important topic. And UNDP once again played a major role in supporting a policy area, a policy domain to be successful in a country that has a very good history of cooperation. So let me introduce you, our distinguished friends from UNDP, without further ado. The Deputy Director of UNDP Istanbul International Center for Private Sector in Development, this Ms. Gülçin Salıngan. This initiative is also important for us to have a center in Istanbul, Turkey, about supporting private sector. And this is only one of the areas that we've been cooperating. And Director of UNDP Sdg Impact, Ms. Fabienne Michaud. It's great to have you in here because we are trying to learn the details of how to do this, and you have the utmost information about the mechanics of this one in line with the policy aspects of it. And Ms. Berisa Rojas, who is the Impact Measurement and Management Advisor at UNDP SDG Impact. Welcome again.
Thank you.
I think it wouldn't be wrong to state, it would be a repetition, but let me start with this repetition. It wouldn't be wrong to state that the United Nations is at the driving seat of the global agenda in sustainable development. And hence your presence and partnership is of great value for us, for all our stakeholders, including those that are based in Turkey. And as we are, yes, the representative of the international investors in Turkey, we are a strong proponent of the UN-led initiatives, including the SDGs in particular, and therefore has launched a sustainable development platform as a collective framework to add a higher visibility to both our members' efforts and support policies concerning the sustainable development. And we are one of the private sector associations represented at the Advisory Board on Impact Investing, which is a public-private cooperation platform devised to foster the impact investing ecosystem in Turkey. This is a major initiative that we are really valuing and supporting at board level. And as I stated, this is a hot topic for us that we are pushing with all our efforts, with all our strength, and members' support also. And we are strictly following the agenda, developing agenda on the climate issues and sustainable development. We provide a comprehensive coverage on COP26, which we were all together and following that one with daily digests, panel discussions, insightful interviews. We also follow the UN's and UNDP's reflection on this important event. And we have member companies which are also active members of the global initiatives like the UN Global Compact, and often sponsoring and leading some of them. And Gülçin Hanım, with this long introduction, because the topic is a very wide-covered topic, would you please share us, to make a start of today's topic, UNDP's point of view on sustainable development? So this is a very broad question, but we would like to receive your updated views about today's agenda and where we are, what we are doing now.
Sure. Thank you. Thank you very much, Serkan Bey, and thank you also for your kind words. Dear participants, I would also like to welcome you all to this webinar on impact measurement and management. We are extremely pleased to organize this much needed event, I would say, in partnership with YASET and UNDP Country Office. Very briefly about our center, we are one of the 5 global policy centers of UNDP, and we do have a specific mandate to leverage the role of private sector in development. With the introduction of Sustainable Development Goals by 2015, the role of the private sector has been also recognized significantly. And not only in terms of its business models, but in terms of capital and financing also. As we have witnessed, there has been a growing awareness and interest among private sector to channel part of their resources towards social and environmental impact. Recognizing this trend, we've been, as a center, working across the world to create and nurture strong impact investing ecosystem in the countries. As some of you may already know, the impact investing market has shown outstanding growth in the last couple of decades, with assets now almost reaching 2.3 trillion US dollar, exceeding 2.3 trillion US dollar by 2020. Of course, this is according to IFC numbers. However, despite this growing trend, there is still a significant need for standardized impact management and measurement practices to properly assess the impact. And this is also very much valid for Turkey, for our country. Recognizing this need, as a center, we've been working very closely with our UNDP Turkey country office to expand the impact investing ecosystem in the country, but also build capacities around impact management. As the UNDP's Global Private Sector Center, we're also pleased to have planted the seeds of the impact investing market in Turkey, which we are very also pleased to see that achieved great momentum in the couple of last years. The studies that we conducted actually demonstrated the great potential that the country hosts for investments, especially with social and environmental impact. Just before pandemic in 2019, we conducted and published the impact investing ecosystem in Turkey. This was a preliminary market analysis for impact investing. And later, based on the stakeholders' request, we developed the Sdg Investor Map based on the methodology developed by our Sdg Impact team, which we are very lucky to have them here today with us. The study identified 27 specific investment opportunity areas under the 9 priority sectors for Turkey, and they are fully aligned with national policy priorities as well as development needs. Now, riding the momentum facilitated by these studies, we also joined efforts with our country office to establish the Sdg Investment Initiative. Now, this initiative basically aims to structure efforts around promoting SDG-anchored investments with an active private sector engagement. So the objective is basically to mobilize private sector capital and blended financing towards this type of investment areas where there is high potential to accelerate economic recovery and growth, especially after the impact of COVID-19. We have also worked with UNDP Turkey to facilitate the creation of a national advisory board, as Serkan Bey already mentioned, in Turkey. This initiative is taking place under the Global Steering Group for Impact Investment. And in this initiative, the objective is to steer the country's strategy to nurture the impact investing in the market. As UNDP IAS-PST, we've been driven to continue our efforts to promote SDG-oriented impact investing, both in Turkey as well as globally. We also look forward to expanding our impact investing portfolio to showcase the investors that, SDG-anchored opportunities do not only exist in the Western part of the world or developed part of the world, but they're also existing in developing countries where they are most needed. To this end, we believe that Turkey presents a promising market to leverage existing resources for the SDG agenda. Before concluding my remarks, I would like to thank you, Mr. Serkan Valandova, and also to my colleagues, Fabian and Belisa, from the Sdg Impact team, for what I'm sure will be a very fruitful discussion on IMM today. Thank you.
Gülçin Hanım, thank you very much. And thank you for all the work you've been undertaken so far and also accomplishments to support this policy domain. And Fabian and Belisa, you are most welcome to Turkey again and to our live webcast. I'm full of excitement, just like our viewers, about your presentation on the standards of impact measurement and management, because that is what matters. After all that policy talk, it is the implementation on the real world and solid policy evidence on what we've been carrying forward and what we are accomplishing. And we are always seeing the full part of the glass, and we see many governments are elaborating ambitious green growth strategies, companies forging ahead with sustainable business models. Like everyone is changing their production and consumption patterns. So we see there's quite improvement. And we also have ESG commitments of our members, and social return of investments is always making a big debate when we are coming to be together on the green agenda. Just to make sure and just to hear from an expert also, can we observe or can we be positive about any real change at the end of the day? And how can we tell a company is truly impact oriented? How can we prove that what we are doing is in line with our policies, in line with our narrative? And how can we prove that we are really creating this impact that we are trying to achieve?
Thanks for that. I think that's a $64 million question, and why we've been spending the last 2.5 years really working, particularly to answer that question on the development of the standards and, importantly, an assurance framework to support the standards. Because I think that element around the trust and confidence of markets in terms of the claims that are being made is really important. Also, one of the things that I'll spend a little bit of time talking about, which I think is really important, even though this is likely to be, an audience with a lot of impact investors who know the difference, but, actually creating that baseline in what is a very crowded and confusing space with a lot of terminology and a lot of approaches and a lot of things that sound like they're talking about creating impact and sustainability, but maybe aren't having the impact we need. So really unpacking those differences between ESG and sustainability, and the change we need to see to actually start matching the volume of securities and investments that we're seeing pile into so-called sustainable investments, actually matching the level of impact as well as the volume of debt that's being issued out of those by putting more rigour around the management practices behind them in terms of driving that impact and outcomes. So I take from that maybe we'll start the presentation.
Please, yes, please.
Excellent. Okay, I'm very happy to be here today, and very excited to actually be in Turkey. It's been a long time. We were talking just before the presentation started. It's been a long time since I've been on a plane, so it's nice to actually make it out of my home country, and really looking forward to the next hour or so and sharing some of the work we've been doing, but also I think some of the lessons learned along the way in terms of where the gaps are and where we need to change and move forward. So let's get started. So I thought that to actually frame today's discussion, I'd start with a discussion about sustainability, impact, ESG, and what impact measurement and management means to us, and also some of the discussion that's starting to happen in the market around some of these different segments of the market, so that we can be on a level on the same page as we start to talk through the other aspects. So, starting with sustainability, what does it actually mean to be sustainable? And this is a definition that the UN World Commission on Environment and Development came up with, that sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their own needs. And I think that's a really nice, straightforward way of capturing the essence of what sustainability means, and something that would be really good for people to come back to when you're looking at, different investment opportunities and different approaches and things that sound that say they're that they're in this sustainability space, to really ask the question: does it actually satisfy this test in terms of contributing to outcomes that meet the present generations' needs as well as future generations. On the other hand, when we talk about ESG investing, by and large, ESG is very much a risk management approach focused on enterprise or portfolio value. So what are the environmental, social and governance factors that could affect the financial value of the enterprise or investment? And while there's a lot of crossover in terms of the topics, in terms of environmental and social factors that might impact enterprise value, they may not be the same things or as material as the things that are important for sustainable development and the people that experience the impacts. There's also the element that you may know the risk and mitigate it in a way that protects financial value of the enterprise or investment, but actually doesn't deal with the impact to the underlying stakeholders. So you don't actually resolve the sustainability issue, but you put in place mitigants to protect the financial value of your investment. Now, over the last few weeks, there's been quite a lot of back and forth around an article that was actually released on Bloomberg, I think around December, but seems to have been picked up in the Twitter sphere and on social media more recently. And I thought that it would be worthwhile unpacking this. There's the original article around the ESG mirage, which was on Bloomberg, and there was a subsequent article off the back of that article in Impact Entrepreneur recently on ESG or sustainability you choose. And I really think that, in terms of actually promoting investment that helps to drive more sustainable outcomes, we need to move beyond ESG towards sustainability. And I thought that some of the things from those two articles I've summarised here in this slide, I think really capture the issue that we're dealing with around ESG, and why we're seeing a lot of investment in that space, but not necessarily the impact we would hope to in terms of outcomes. And just in terms of some statistics, there's we currently have about 1.7 trillion in the sustainable debt market. Global green, social and sustainability bonds run at about $767 billion US. In terms of PRI, there's 2,800 signatories to the Principles for Responsible Investment, managing over 90 trillion US in assets. But climate change, we're not where we want to be. We've got accelerating biodiversity loss. We've got a lot of vaccine inequality and increasing wealth inequality around the world. And interestingly, the World Benchmarking Alliance just released a report, and one of their conclusions was that around 99% of companies are on course to entrench rather than end social inequalities in their efforts to address the Sustainable Development Goals. So we've obviously got a gap in terms of the intent around driving capital to areas that can drive more sustainable outcomes, and the outcomes themselves in terms of driving that change. And I think that the first bullet points on each of these sides are really telling. So, an ESG attribute oftentimes almost has an exclusive goal of creating enterprise or portfolio value, regardless of whether this destroys system value. So the whole concept around really starting from that financial materiality place. And in terms of impact investing and sustainability, more of a goal around creating system value, whereby enterprise or portfolio value retains and builds the value and ongoing viability of ecological and social systems upon which ongoing enterprise or portfolio value depend. And I think that's a really important point. And to me, the standards, this one issue is at the heart of the change that will drive us in the right direction. That really we need to move to that understanding that sustainability increasingly is going to be a really big disruptor for businesses and investors and governments and the world, just as automation of mechanical processes in the Industrial Revolution and the ongoing waves of technology disruption that we've seen for a whole host of reasons. It's not going to go away, and we need to recognise that sustainability increasingly is going to be a driver of business and investment value, and start thinking about things differently and starting from that different place, which is something that I'll talk a little bit more about as we go on. So we've got what sustainability means and ESG. So what is impact and impact measurement and management? So impact is really intertwined with sustainability, because ultimately with sustainability, what we want to be doing is measuring the change in the well-being or the impact on people and planet. And we really look at well-being as being components of economic, social and environmental change that impact on people and the planet today and into the future. And with a focus on really looking at all material positive and negative changes, and trying to hone in on those elements that the organisation or the portfolio are influencing through their direct operations, business relationships and supply and value chains. So impacts are those that are important to the stakeholders that experience them, and important to sustainable development and achievement of the Sustainable Development Goals. So impact management is really the process around integrating sustainability and the SDGs into organisational systems and decision-making and governance processes, including setting goals and tracking performance against targets, using data and information to make better decisions. So to really generate options and then make choices between those options and manage the trade-offs for optimising impact, because any discussion about the Sustainable Development Goals and sustainable development more broadly really highlights just how interdependent economic, social and environmental outcomes can be, and the need to really manage across that interdisciplinary nature of those outcomes, and understanding that we can't always achieve everything for everybody at once. So really understanding what's important to the people that experience the impacts and managing for the most material impacts in that context. Another important aspect around management is where we peg ourselves to. So are we focusing on the things that are important, and are we actually linking that to thresholds in terms of where at a system-wide level we want to get to, which of course with the Sustainable Development Goals is integrated into the targets that sit behind the 17 goals. And importantly, including the right voices in decision making. So really looking to more purposefully include the voices of those that experience the changes in the decision-making process, rather than that being a more superficial engagement process or informing stakeholders of decisions that have been made. So one of the things that we were asked to provide was just a bit of an overview, I guess, in terms of the impact measurement and management ecosystem, and the providers of principles, standards and metrics across that ecosystem. So we found a couple that we thought were probably useful and highlight some key points. Firstly, this is I guess more focused on reporting frameworks. You see a lot of the reporting frameworks, but I think it's really really useful in that it actually shows the difference between a lot of these different standards and frameworks, and that they're not all built equally. A lot of them are trying to do different things. So, you know, you may not be necessarily, you know, needing to select between, you know, all of the things on this page, because if you're, you know, really focused on enterprise value, then you're really looking at that first column. Whereas if you're more interested in, you know, value to society and, you know, multi-stakeholder materiality, you know, some of the things on the right-hand side are more, you know, relevant to you. I think the thing to take away from this is it is a crowded ecosystem. It's going to become more crowded. There's, you know, a lot of things that are underway, and you know, this is a space where there's going to continue to be more, you know, change and evolution and development. So really, you know, what we've tried to do with the standards is provide the organising system so that organisations and investors have the context to actually go through the process of deciding what's the best tools to use in our context and what's important to us, rather than linking or hooking onto specific tools today. Really providing that, you know, decision-making framework, rather than saying, you know, here's the series of tools you should use, so that those decisions can continue to be made into the future as this landscape continues to change. More to the impact investment end of the market. This is a table from GIN's latest report on the state of the impact management and measurement practice report, which I think was released in 2020. And it just lists the tools and frameworks from their survey that respondents have said they use in measuring and managing impact today. So I think the interesting thing here is that, you know, relatively speaking, given the Sustainable Development Goals were launched in 2015, very quickly they've become fairly important in terms of being the anchor, and I would say the language that connects actors across the system in terms of understanding and communicating and aggregating information about sustainable development. So it's the most used framework amongst those investors. The next two are the metrics and metric sets that IRIS, you know, GIN's IRIS platform provide. The impact management projects shared norms feature fairly highly too, and then a series of other platforms, and lastly, you know, at the end, you know, some of the tools that sit within the SASB and GRI platforms, in particular, you know, around both of those are reporting platforms, but both of them have obviously a lot of metrics, and, you know, in SASB's case, also tools around identifying, you know, what the most likely material impacts are by sector, etc., which are used as well. Now, this view actually provides some examples of different types of you know, tools and frameworks that are currently in place, and you know, maps them, I guess, shows actually how the standards help to provide that framework to you know, to think about which ones, you know, make sense, you know, in context. So, you know, in terms of some of the impact management tools in the orange box, you know, some of the things that are well aligned with the standards, so sit well in terms of, you know, having that focus on sustainable outcomes rather than exclusively on enterprise value is you know, the BLAB SDG Action Manager. UNEP FI have their radar tool. You know, the OECD, you know, guidelines for multilateral enterprises. Obviously, we're seeing development out of the EU with the taxonomy for sustainable activities, UNCTAD and IRIS metrics, and GRI metrics as well. So, you know, this sort of shows where a lot of those things that exist in the market, fit within the structure of the standards and help to, I think, bring some sense to where they fit in to how you would actually go about integrating impact into internal decision making and management systems. So why does sustainability and the SDGs matter? And I think the question here is also why now? And this is a fairly confronting photograph from my home country. So we saw, particularly a year or so ago, we had massive fires which were unprecedented across the country, and these were fairly common scenes. The amount of carbon release from those fires was extraordinary. The amount of wildlife loss was also extraordinary. But as I mentioned before, I think we need to start thinking about sustainability very much in the private sector as a major disruptor. For a lot of reasons, it's not going to go away. We've got issues from climate change are going to start impacting us in a very tangible and real way, soon, and are impacting people and environments today. Biodiversity loss, all of these things, 50% of the world's GDP relies on high functioning ecosystems and biodiversity, and yet we're losing and destroying biodiversity at an accelerating pace. Rising economic inequality is a constraint on economic growth. All of these things, are actually going to start having impacts that mean that the pie that the private sector participates in has the potential to get smaller if we don't start dealing with these things. So. I also think that as we say here, that the increasing we're increasingly pushing against some of those boundaries, and so the interdependencies between social, environmental, and economic outcomes are becoming increasingly apparent. And I think COVID's really been a harbinger for us in terms of the potential for climate change to impact very broadly in terms of economic outcomes. COVID's obviously been a massive health crisis, but having extraordinary economic impacts, particularly in the places that can least afford them. So, I think that we're gaining that appreciation that increasingly future prospects for future prosperity and economic growth increasingly depend on the health of the planet and well-being of humanity, and that presents both risks and opportunities to the private sector. So, and I think the ESG space has very much been around understanding what some of those risks are and trying to manage them in terms of the financial impacts. And we're increasingly seeing businesses set up to really exploit and capitalise on those changing trends. So renewable energy businesses, opportunities in the health space, really looking to focus themselves more broadly on their purpose and dealing with some of these challenges as their core value proposition and reason for being. So, given that we've got that backdrop, in terms of sustainability, starting to, the root cause and starting to, bite much more than it has in the past. While it was, some of the, the things that we had in place around the system. While, they've always, probably been, less than ideal in terms of, the externalities created and their impact on environment and certain segments of the community, largely we've managed to get away with that. But, in future, for all of those reasons, it's going to be less easy to do that. So we're starting to see, some real shifts come to the fore. So, firstly, we're seeing, younger generations, motivated more by sustainability and impact and, ethics and emotion in terms of, really wanting to align their investments and where they work and what they buy with more sustainable outcomes. We're seeing, big traditional global asset managers and motivations to protect their reputation and also understand and mitigate loss as key drivers to think about things more broadly from a sustainability perspective. And as I mentioned before, more businesses actually moving into that space to actually take advantage of the disruption that's already underway. And, off the back of that, we're seeing regulatory pressures. So, we're starting to see, a move in terms of actually translating some of these things into changing regulatory requirements. And that's, we're seeing that, most tangibly, I guess, in Europe, but, in other places as well, particularly around climate and carbon. But, in other areas as well. And that makes sense, especially as we look post-COVID, for many countries, fiscally constrained environments, if we're going to start amassing, externalities with costs that governments need to be able to pay for, it makes sense that at some point they're going to regulate to share that cost around or limit that cost so that that burden isn't sheeted home to already stretched government finances. And there is definitely, from a demand side, the consumer push. We're seeing a lot of millennials claim to be willing to pay more for a product that's more sustainable. So from an organisational perspective, that ability to attract, retain and motivate and engage staff increasingly as the financial system starts to think about this a lot more systematically. We'll probably start to see much more significant ties between sustainability and access and pricing of funding, etc. So all of these things are playing out, which really support the need to put sustainability more centrally into how organisations and portfolio managers think about their strategy and their purpose and what they're managing to over time. So, in terms of private sector contributions towards the Sustainable Development Goals and Sustainable Development Outcomes more generally, I think they really fit into two categories. The first is around developing products, services and solutions for unserved and underserved markets and from that leading to new customers and market opportunities that accelerate innovation and filling some of those needs. And that's really, the space that the investor maps occupy and, the conversation at the start of the session, really trying to drive capital very specifically to where it's needed most to support achievement of the SDGs. But there's also, a need, across the whole investment and capital spectrum to significantly reduce negative impacts that investment and enterprise activities are having and make the whole system more sustainable through more efficient use of resources and more thoughtful integration of impacts into core decision making across the mainstream, across all organisations, not just in niche parts of the market and the impact investing space. Although, I often I'm also involved in the GSG. I sit on our local NAB in Australia, and often say that in terms of goals for the GSG and the impact investing community, 10-year goals. It would be great if in 10 years impact investing didn't exist as a term, because incorporating impact into decision making was just second nature, and we did it as a matter of course, rather than it needing to be something that was separate from the majority of what we do. So the case for change. I think really we're at a point where we are at one of those tipping points or points of intersection where we've come so far, but what got us here isn't going to get us to where we need to go. So we're not on track to achieve the Sustainable Development Goals. I think in 2019, the estimates were it would take us till 2082 to achieve the Sustainable Development Goals on our current trajectory. With COVID, that's probably put us back to the turn of the next century on current trajectory. Many businesses and investment decisions and activities are having negative impacts on society and the environment, and as I said before, inequality, climate change and other sustainable development issues are increasingly a constraint on economic growth. So what do we need to do differently to basically break that nexus and put us on a different trajectory to achieve the outcomes we need? So in terms of the work that we've been doing, our view is that to achieve the Sustainable Development Goals and put the world on a more sustainable and equitable path, we need a transformational shift in mindset and management decision making. And the big circle in the centre here is really to us, making that move from ESG to sustainability. So really working to embed sustainability and the SDGs at the heart of business and investment decision making. And this is the piece that organisations and fund managers and investors can do and take ownership of themselves. It's not going to happen in isolation, and it's not the private sector's role to do everything, but it's a really important piece of the puzzle. Alongside that, we do need to create the enabling environment. So there is an element around policy change and reducing externalities in the system that will help to incentivise the right behaviours and provide an even playing field for private sector operators. And then on the right, there's also at the moment a lot of focus on reporting systems. So all of the discussion around IFRS and some of the work in the EU, a lot of focus on reporting. But for us, reporting is what comes after you've integrated impact well into decision making and internal systems. And if you actually create the internal management systems to integrate impact into decision making, then you're going to be in a much better position to report out in the future. And I also think that the decision making and management piece is critically important because it's forward-looking and future-focused. It's about making decisions that you will be reporting on in the years to come, whereas reporting is probably too slow on its own because you're really looking at what you already did rather than really focusing on the decisions that are going to change outcomes in the future. So this slide sets out what we think, and we're using here. We're looking at organisations, but looking at the actions that we think are consistent with driving the change that we need to see. Really throughout the whole business. So through strategy, management, disclosure and transparency practices and governance as well. And when we started the work with SDG Impact, what we really around the standards, what we really found was, there's a lot of really good things that are already out there, but there were some significant gaps, and particularly around strategy and governance. there were big gaps in current market practices. So, the standards have a big focus on strategy. That number one, as I mentioned before, I think number one, that commit to operating sustainably and embedding sustainability into decision making is really important. I think once the private sector knows what problem it's solving, it's very good at actually executing around those things. But if you're starting with the wrong problem, you're never going to get to the right outcome. So, if we make that mental shift that sustainability is really important and it needs to be central to how we do everything, not an add-on to what we do. The rest, a lot of the other things will happen as a matter of course, I think, because that's what organisations are really good at doing, is solving those problems. I think number two is really important because I think what we do at the moment is really we've been through a period of deep specialisation where everyone's really, anchored in their silos. But, the SDGs require actors across the system to work together and collaborate and do things differently and bring different pools of capital and expertise together to solve, our greatest challenges. So, we need to actually create different ways of working that bring people together in different ways and enable collaboration and blended finance outcomes where necessary, and not to close down from a portfolio manager or a company's perspective, the possibilities of where they can actually participate and make a difference. Because I think that, what we tend to do is when we do our environmental scanning, it tends to be a bit, organisation centric. It doesn't think broadly enough about these sustainability changes that are underway and how to keep that environmental scanning really broad in that first instance, to look for the opportunities that may stretch us in terms of how we've worked in the past, but present really big opportunities going forward. So just moving on here, then once we understand the sustainable development context, we understand what's important, at a broad level, and we understand what's relevant to our context and the organisation, really then embedding that impact into purpose and strategy, and setting ambitious goals, really looking at that in context of the rate of change and pace of change that we need to embed to get to where we need to get to, and then continuing to adjust and improve over time, recognising that we're all operating in a system that is less than ideal in terms of sustainability. So none of us is there yet. We're all learning, and as the environment changes, as new information comes to light, we should be factoring that back into our goals and the direction that we're going in. And then the second row there is really around then integrating impact considerations into organisational culture, systems and capabilities, and driving that through the process, and really integrating impact into how we make decisions and not having it as an add-on. So then with transparency, really focusing on information that can help the users of the information that you provide make more informed decisions as well around the impacts that the organisation is having, and reinforcing all of that through governance practices. And I think feedback through the processes we've been developing the standards has been a realisation from many people who've been participating in that feedback process that that governance is a gap, and there isn't a lot of guidance around making sure that this is systematised and accountability is built into the system through through governance practices, through boards, through the internal quality control and compliance activities of organisations, to make sure that that it's sticky. And I think that a large part of this too is really about managing change. So, that cultural change piece is really important for organisations in terms of embedding this going forward. And, like with all change programs, really looking for where the layers of resistance are in the organisation and thinking about how to address that. So now I'm going to talk a little bit about the Sdg Impact Standards specifically, and these business actions. So we have 3 sets of standards, Sdg Impact Standards for enterprises. These are the business actions from the enterprise standards for private equity funds and bond issuers. And we're really organising, the training, the self-assessment tools, and the assurance program around these, business actions in each of those contexts. So the standards have really been designed to help businesses and investors integrate impact into management decision making so that they can optimise interrelated economic, social and environmental impacts. And I think one of the things that's important just to reinforce is that interdependency across economic, social and environmental impacts and the performance of the organisation. We're not saying that organisations and investors should be doing things that basically put their financial viability at risk, because ultimately organisations and ability to contribute to solutions on an ongoing basis is reliant on their being in business and being resilient and sustainable themselves. So we're really looking for that, through this decision-making process to identifies those points of intersection and, optimising, impacts and the company's and investors' dependencies on social and environmental factors as well. So with the standards, what we're really trying to do is drive a decision-making framework that drives sustainability from being an add-on to what business gets done to how all business gets done. Moving from SDG alignment to SDG action. So, and importantly with the next one, from reporting to decision making, because what we're seeing at the moment is there's often a lot of focus on reporting what organisations already did differently using the SDGs or the 17 pretty coloured tiles as a different filter to report information, not necessarily to drive different decisions and use them strategically to make different decisions around impact. So also, shifting from a focus on measurement, often for the purpose of reporting out, to management. We want to manage our impacts, and to do that, we need to collect information and measure measure outcomes so that we can make better decisions, so we can generate the options, so we can choose between the options, so we can manage trade-offs better. So it's not just about measuring to tell stakeholders what you did. It's really about measuring to drive more informed decision making inside the company, inside the portfolio, and then providing information that makes sense to external decision makers so they can make better decisions as well. As I said before, really trying to move from that operational focus on the measurement and reporting to being more strategic and at driving different decisions, and moving from a focus on financial risk management to sustainability. And I think for me, I think the other thing that is important with that point is that I actually think it's misguided to start from a financial materiality perspective in terms of decision making with sustainability, because I think we're very anchored to our current worldview and understanding of the world we live in, and very much, especially in the private sector, usually pretty short-term focused. So my view is that starting with financial materiality, we actually systematically underestimate the future financial risks the organisation or portfolio is going to be exposed to anyway. And if we lift up and think about things from a sustainability perspective, that's actually going to help us identify those things much more accurately and not leave things out that today we don't think are important, but tomorrow may actually become very important from that perspective. So the cornerstone of the standards is, irrespective of the set of standards in place, is around operating sustainably and contributing positively to the Sustainable Development Goals. And that can't be achieved without demonstrating respect for planetary boundaries, human rights and other responsible business practices. And that's realised through effective impact management and decision making. So that those couple of sentences basically underpin everything, through the practice indicators that we have embedded in governance, management approach, strategy and transparency in the standards and across all of the sets of standards. And, as I mentioned before in the red box there, that if we actually really improve our internal management of impacts, that's going to put us in a really good position to meet the current and future requirements around reporting and disclosure. I think that one of the challenges organisations have at the moment is that, every time something new comes along in terms of reporting out requirements, a new process is put in place to manage that, because we don't have the core impact management system in place to drive everything that we need to pull out of that. So instead of one source of truth within the organisation, we end up with all of these usually manual processes to meet, this particular need and that need. And we're going to see more and more, I think, reporting and disclosure requirements, come to the fore. But if we develop, a holistic impact management system alongside our financial management systems inside organisations, then that feeds everything else. And, I think that if we use the financial management as an example, it's interesting to me that in the sustainability space, we're really coming from reporting backwards into management. Whereas, with financial management, organisations have had bookkeeping systems, well-developed internal financial management systems, and then the global, framework for statutory financial reporting developed around that. And the information organisations collect internally feed into that system, but they're not the same information. And the management piece came first. We developed the ability to manage our finances and manage companies, with non-standardised approaches, and there's still a lot more variation in the management reporting of financial matters within organisations than there is in external reporting. But here we're sort of using reporting and coming backwards, and I think, and actually trying to make it one system. But I think we need to separate out more that, that focus on developing internal management capability first, and then using that to drive high quality reporting out the back end. Now, on the standards specifically, what we decided to do with the standards was actually make them best practice standards, recognising that most organisations aren't there yet, but that actually what we really needed was to show where we need to get to and the end game. And this slide reflects one of the several thousand useless quotes that I have heard over my life and accumulate in my brain, which is leaving not much space for much else. But that on their way to the moon, rockets spend only about 3% of their time on course. The other 97% of the time, they're course correcting. So what they do have is a clear sight out of their window of where they're trying to get to, because they know they want to get to the moon, and the moon is out there and that's where they're heading. So what we wanted to do with the standards was really provide that moon in terms of where do we need to get to collectively in terms of a shift in mindset and impact management practice that will enable us to create a more sustainable future and achieve the Sustainable Development Goals. So So the rocket here is our current business and investment management and decision-making practices. The moon's our goal, and that's what's embedded in the standards. And along the way, we've developed self-assessment tools and are developing the assurance program that will help organisations and investors get there over time. So, the standards are quite ambitious and aspirational, but we don't want that to put people off and be discouraged about starting the journey. We recognise that there's a need to encourage people onto the journey, and then also reward continuous improvement over time. So with the assurance framework that we're developing, the minimum thresholds for achieving positive assurance and being eligible for the seal are set at a level that's lower than what's indicated in the standards, but it also has the requirement to demonstrate continuous improvement over time. So when you go back for assurance, for subsequent surveillance assurance updates, the important thing that will be an area of focus for the assurer will be the development plan that you put in place at the time of the last assurance assignment. What's your progress against that since the last date? And our view is that these are things that take time to integrate into management practices. So we would expect that, especially initially, probably cycles of around 2 years for assurance. 1 year is probably not enough to actually go through the process, integrate it into strategy, and be able to show progress. So we would expect to see, updates if people go down that independent assurance route of every couple of years. And, I think it's also important to note that, the standards have been designed to help organisations and investors become more sustainable in their practices. So they're voluntary. The assurance framework around the standards is voluntary as well, but hopefully together, helps to start putting us on a different trajectory. And we do think the assurance is very important from the perspective of being transparent and clear around what those minimum requirements are, and how we're moving as a collectively as a system over time. So the standards, as I mentioned before, are basically a decision-making framework. And we have 4 sets of standards. So we have the 3 sets of standards that have been developed by Sdg Impact for the private sector. So for bond issuers, enterprises and private equity funds, they're all available. They're out in version 1.0 and available on the Sdg Impact website. We've started translating the standards into different languages as well. There's also a 4th set of standards that we worked on in collaboration with the OECD, which are very much more targeted at donor countries, being the OECD, and their private sector partners. And we felt we actually are really happy with that collaboration. Our focus has been on the private sector, but these standards with OECD really help us to connect across the ecosystem, the private sector and development capital and public sector, and really support our value proposition that and theory of change that we need to connect capital across the system. So all of the standards for family, they all embed them together to hopefully collaborate easily, around some of these issues. So the SDGs, the guiding principles for human rights, UN Women's Empowerment Principles, the IMP, shared norms, all of these things are very much integrated into that decision-making framework. Above that, there's several sets of high-level principles which are terrific, the operating principles for impact management, the UNEP FI principles for positive impact finance and responsible banking, various organisations are following the standards, they should also be meeting the requirements of those high-level principles. But the standards go to that next level of driving, standardisation, more detail in terms of how to actually bring that to life within the organisation or portfolio. Being a decision-making framework, the standards don't seek to replicate, the good work that's already out there in terms of a lot of the frameworks and tools that are already available. So really the standards guide how you go through and provide the context to help users choose the impact management tools or frameworks that that will help them, measure impact and integrate it into their internal decision making. So, so things like the IRIS metrics, even on the bond side, being able to link to existing taxonomies, such as ICMA's taxonomy or the taxonomy that the EU's developing. All of these things link in, rather than being replicated through the standards. And then obviously, link then to external disclosure and reporting frameworks to be able to report out, with the existing frameworks and emerging frameworks that are being developed, through forums like IFRS. Now, to support capability building and skill building in the impact measurement and management space, and in line with the philosophy that we've embedded in the standards, we worked with Duke University to develop an online free course, which is available through Coursera, called Impact Measurement and Management for SDGs. So I think there's several thousand people that have already been through or are currently undertaking the course. Actually, I think it's several hundred have already completed the course and got their certificates. And, talking to, Kathy at Duke University, the number of people who've already been through it, we released it in September last year, just blows her mind, because, she said this is like 20 years worth of classes. If she was actually running a class on impact measurement and management, it'd take her 20 years to push the same number of students through her courses in, face-to-face or, through university classes. And just the reach this is having already is terrific, and getting really fantastic feedback from people. So the course actually takes learners through the journey, both for on the organisational side and the investment side. And in both cases, there's 4 personas in total. So a large organisation and a small organisation, and a more mainstream large investor and more of an impact investor. So it gives those different views throughout, which I think is really important, because ultimately, providers and seekers of capital need to understand each other's perspectives to join that need and capital up more. So just wanted to mention that is available, and you can again from the Sdg Impact website get access to that. As I mentioned a little bit earlier before, with the standards, what we've done is also develop some self-assessment tools so that people who would like to adopt the standards can use the self-assessment tools to perform gap analysis. It helps to prioritise areas that might be easier or a little bit lower hanging in terms of ease within their own organisations, and to start building out their development plans as they look to implement the standards. Again, those tools are available on the website, and so are easy to download. And we're in the process of developing the assurance framework at the moment. So again, there's been a lot of interest around the assurance and the seal in particular. And what we really try and stress is that ultimately the goal is to improve our ability to drive impactful outcomes and improve impact management within organisations. And the seal is the nice to have at the end of that journey, and that is probably going to be a bit of a journey to get to the seal and to meet the requirements of the seal. So, we think that for organisations, it's really important to, to familiarise yourself with the standards, start using the self-assessment tools, and work towards adoption and assurance over time. And this diagram really sort of shows that that progression that we expect. So I think I'm almost right bang on time to stop for questions. I hope there are some questions. I like questions a lot more than particularly in this format, looking at myself for an hour speaking. So I hope that there are some great questions and we can make it more like a conversation for the next little while. So
Sure, Fabian, that was amazing. Thank you very much for so much content and actually so much inspiration related to this content about it is now clear that what to do and how to do is very clear, and there are standards are developing, and for any domain, an evolving domain, I guess it is normal, as you reflected in one of your slides, like there's a crowded ecosystem and it is getting more crowded, but before everything is diluted to a simple and a standard form, I think it also shows that everyone is trying to translate these main principles to their own operating and building their own documentation, own modus operandi, and at one point it is also supporting a healthy communication of any progress in this area. And we expect that it is going to get more simpler thanks to your efforts for making it so reachable, and also the teaching program, the opportunity for everyone to learn the mechanics of this and learn how to implement in their own business operations. So before proceeding to the question, maybe there's one point that we would like to highlight. Starting from the beginning of the COVID, like all the challenges we named really required some mentality change and change in the operational structure, the change in the way we are doing business, like including the digital transformation, like integrating to the new supply chains, global supply chains. And this sustainable development issue was the same for this. Like all the best practices really demonstrated an organizational change, the change in the decision-making processes, the change of the doing business. And while trying to reflect these best practices, we are also trying to reflect the best regulatory environments to make these changes possible, to make these best practices viable and possible to begin with. And that is one aspect also that we are focusing on. And related to the this crowded ecosystem page, there's one question coming for you. Like, if there are participant is asking and wondering if there are differences between UN SDG Impact Standards and others such as IFC standards. Maybe it would give an idea about how these standards speak to each other and how they coexist.
So, well, in terms of I assume in terms of IFC, the reference is to the operating principles for impact management. So if that's wrong, jump in. But as I said earlier, what we did in terms of that first piece of research and really conceiving and designing the standards, we took the existing principles, which were all all really good in terms of what they have in them. We think that there were some gaps. So, we think, as I mentioned at the start, strategy and governance were gaps across the board in a lot of the existing frameworks that were available. But but everything that is in the open principles is reflected in the standards. So if you look at the Sdg Impact Standards for private equity funds, very aligned, and we actually have a mapping document which I think is on the website as well, that maps the open principles to the Sdg Impact Standards for private equity funds. So really a large part of what we were trying to do with the standards was help to actually drive that convergence and provide the context of where all of these things sit, because I think people go, there's so much stuff and why do I need all this stuff? But they're doing different things and they perform different functions. And the important thing is, are they interoperable, and how do they connect? And how do you pull all of this into one system? And as you said, actually make that meaningful, within my organisation or the portfolio I'm managing. And that's going to look different, depending on the context that the organisation operates in and what they're doing. So the standards, again, we've really tried to design from that bounded flexibility approach, that there isn't one only way of achieving these outcomes. What we need is the structured and systematic decision-making approach, so that it's integrated in a way that we're being comprehensive and including all of the things that are material, that we're focusing on negative impacts as well as positive impacts, that we're including stakeholders that experience the impacts in the decision-making process, that we're thinking about stakeholder segmentation, which marketing departments are pretty good at, right? They're pretty good at segmenting their customers to drive profit. There's a need to actually think about segmenting stakeholders to identify the people that we're not reaching, that could become, new customer sets in the future. Leapfrog's been very good at that in terms of identifying, new markets that you can sell financial products to, at much lower cost, by changing the business models to do that. So, really the standards are saying, well, here's all these things that already exist. How can we bring this closer together, and also closer together across different actors? Because we have a different, impact investing. The impact investing world uses language which, the responsible investment world doesn't fully use, that, organisations don't use. Government talks about sustainable development differently. The development space and donor space speaks, with a different language. How do we actually, bring all of this together and try and find, a more singular path through that helps people communicate and connect the dots more easily in the future?
Thank you very much. Thank you. And as the peer learning is at the heart of this transformation, many questions are asking some inspiring examples from Turkey or abroad. If we cannot name some firms, maybe we can name some industries who are really making this transformation at a higher pace than the other ones. And maybe we would really appreciate if you can touch upon some success factors that what people who are achieving great progress on this area are doing better than the other ones.
Yeah, that's a great question. And I think that, we're hearing that loud and clear, that case studies and examples are going to be really, really important. What we're starting to do with, in terms of the peer learning piece, we have in several locations, groups of organisations that we're working with, sort of, almost in a working group fashion, as they go through that journey of adopting the standards, and in that smaller environment, providing opportunities for peer learning amongst working group members. So, in Malaysia, we had a number of organisations go through our Impact Accelerator Lab, and five organisations from that group self-selected to be part of a working group to move towards adoption of the standards, and they're working together. And Belissa's actually working with our regional expert Devahuti with that group to actually bring that to life. And what we would like to do as we start working more systematically with companies through that adoption phase is to work with them to create case studies and examples that can be shared. And our thinking is that we will look to try and organise those around those 12 business actions that I mentioned, so that as we're thinking about it, we're creating that common structure to make it easier for that information to be shared. In terms of specific examples, trying to think. Belissa, have you got any that stand out?
Yes.
Maybe Peruvian fund, but
Yes. Yes, we could use that. So basically, we have helped funds, for example, improving their IMM practices, right? Funds that wanted to address both ESG and both impact, but in a kind of a sequential way, right? Because sometimes the funds is like, okay, I have to comply with ESG, I have to comply with impact, I want to do both, but how do I start? So something that they found very useful is that actually the standards cover both fronts, right? The way we talk about impact, economic, social, and environmental is also, it also covers negative, avoiding negative, and trying to do good, having positive. So in that sense, what they really did is we went through the standards, the self-assessment tool, and what was working with them is, okay, this is the idea, right? This is the moon, as Fab mentioned. And don't worry, you don't have to get there tomorrow, but you know at least where the moon is. And now let's do a self-assessment that's prioritized, because the tool also allows you to prioritize based on your needs, your particularities. It's not that SDG Impact tells you, you do this first. No, you're going to go through the assessment and you will decide what makes sense to do first, second, and third. So basically their experience was, okay, thank you. Now I understand everything I need to do. I also understand that this is a journey. So we're going to start by actually, what is it, our theory of change as a fund, right? What is our hypothesis regarding the sectors we want to invest in? And also something that was very interesting that I will just share, and I'm happy to share more, by email, or you can also reach out. I want to invite everybody that really likes this and wants to learn more to just contact us, because we're looking forward to champions to give more examples. But basically, something that they really like is that the tool really allows them to plan ahead in a sequential way, and also gave them more resources to talk with potential funders, because potential funders were maybe focused on indicators, and they say, no, I have this management plan. So indicators make sense, if I'm going to take this decision. So they improved that in their conversation. So they really like that approach. That was sequential. They had a plan. So the feedback was very positive. They really felt there was still, a journey to go through, but they knew the starting point and the moon, right? And the North Star, let's say. Thank you. And also, before I forget, I wanted to invite you to look at our website, because we have mapped the operating principles for impact management there in relation to the Sdg Impact Standards for private equity. And you can see how they overlap. And because the principles are high level and the standards are more specific, anyone that really wants to get it assured, the operating principles, can do that by using the standards too. Just a quick note. Thank you.
Melissa, thank you very much. And actually, Moon is a good analogy for where we are and where we are trying to go, because Moon is getting closer with all the technological improvements and all the ambitions of the people, with the support of the entrepreneurs who are supporting these kind of initiatives. It is really getting closer. So does this green agenda. And one last question is about this Sdg Impact Seal. Apart from serving the greater good, what would it bring to the firms if they have this kind of a seal or this kind of a marking?
Well, I think the seal from an organisation's or recipient's perspective, will be an easy way to be able to show their stakeholders that they've committed and are on track to integrating sustainability into their decision-making practices, which I think is actually potentially more important than the litany of, I call them the magic metrics. Everybody wants the magic metrics that helps, external users know that, organisations are doing the right thing. But, there are no magic metrics, and it's much more challenging to and important, I think, to know that organisations have really embedded sustainability and the philosophy into how they make decisions, and that's much more forward-looking than coming up with a handful of metrics that you report on an ongoing basis. I think increasingly what we're seeing is that sustainability is increasingly important to lots of stakeholders that organisations deal with. It's really important I think it would be really important from the perspective of internal stakeholders and employees in terms of, demonstrating, that commitment to adopting and contributing to sustainable outcomes amongst staff. It's becoming a bigger issue from a consumer perspective. We do have, increasingly, from a portfolio perspective, people that are wanting to align their investments with more sustainable outcomes. So, this would be a way of demonstrating that that's being integrated into how the fund thinks about what it invests in and how it manages those investments. So I think on a number of levels it provides a really easy way to show that that organisations are committed and on track to operating sustainably and contributing in a positive way. Possibly in a more meaningful way than just reporting out lots of data on metrics. It doesn't necessarily align with whether or not those organisations are driving outcomes, because with a lot of the metrics being reported, they're activity and output metrics that they don't necessarily align with with driving change at the pace that at a pace that we need to. So, Lisa, do you have anything to say? No.
It is that clear as any kind of standard. It is really clarifying the message and the perspective of the companies. And we really congratulate you for this initiative as well. It is well needed, and it is going to feel. It is going to be a target, I guess. And it's always good to have some targets for these companies. And we guarantee that we are going to have some best practices to support this cause that we are sharing together from our network from Turkey. And many of our members also have some emission standards, emission commitments, ESG plans, and impact investment approach and managerial changes in the way they are doing business. So thank you very much. We are not at the beginning of, we progressed a lot in this agenda. Thanks to many of your studies that is supporting this policy domain, the development of it, and also the implementation aspect of it. And we'll be continuing working together to strengthen the regulatory environment to support the outcome of many successful examples from many industries that are operating. We are really positive because the global agenda is also supporting this one. Okay, these are challenging goals, but at least we know what is right. We have a consensus about what is right. Now we are working on how to do it. But for the first time, while checking the best practices of coming from many industries, what is right is also profitable and doable. Maybe that is the good thing that we should focus on to widespread the best practices. So before closing, Fabian, do you have any final message for all the experts who are trying to undertake these kind of challenging but fruitful endeavors?
Well, first of all, I'd just like to thank the audience for listening in today, and keep going. It is a journey. It's not always easy, but I really honestly believe that and I think that often it's easy to get discouraged because the challenges just look so big. But I'm a really big believer that everything that every one of us does is that proverbial pebble in the pond, and at some point all those ripples are going to connect up and become something that's really meaningful and important. So I think that there's a huge amount of convergence in this space. I think COVID has really honed people's thinking and I think really made things like the impact of climate change has just been such an abstract thing for so many people, but every person on the planet is living the COVID reality and seeing for themselves how health issues can translate into economic issues and impact lives jobs and livelihoods and the rest. So, I think that we have a lot to work with to really accelerate change and, work together. And everyone that's excited and motivated and passionate about this, I think finding the other people that are likewise motivated and passionate and joining that up is a real opportunity. We just need to maintain the energy and keep pushing forward.
Thank you very much. Thank you. So thank you, UNDP, Fabian, Belisa, and also Gülçin Hanım from Istanbul International Center for Private Sector in Development. So we'll be continuing with this agenda because this is not a passing one. It is with us, and it is going to be with us for a while until we achieve what our targets are. And we have our sustainable development webinars, incoming webinars in which we are trying to show industry best practices with return on investment details and which are applicable to many industries. If you are in the manufacturing sector, like many things that you are going to hear from us are going to be directly applicable to your working spaces. So please stay tuned with us and help us to spread this good information and support our efforts to speed up the global level of commitments in creating this change. Thank you very much, Fabian, Belisa. It was a pleasure having you both.
Thank you. Thanks for having us. Bye, everyone.
Thank you.
Have a good day and stay healthy. Bye-bye.